All right, how's everybody doing? Cool. Let me open the chat real quick. Yeah, man, doing fine. Staying busy. Can't believe it's already April 14th of this year. Birthday was chilling. Yeah, birthday was super chill. Mhm. Yeah, man, time feels like it is flying, man. It's been feels like literally like a month ago since I graduated. But yeah, we can go ahead and start fresh from here. Cool. We know that the bias in terms of at least a minimum medium term for the past, since last Zoom was bearish, and we were aiming for, previous liquidity that we had pointed out, and then obviously eventually the previous low present. So let's go ahead and note this, because right, if we are going to argue now that this has taken a new low, and I'm kind of hoping for this to continue lower. I don't see why this wouldn't come lower, but either way, just solely due to solidified points, we know that the final leg to the upside was there, and that this, right, is now technically, in my opinion, a sign of unwillingness. So in terms of the overall bias, you guys know that we have been overall bearish, just because high to low, right? And obviously this entire time, pretty much since the majority of us have been trading, we have been within this pullback region per se. So as of right now, in my opinion, I think we are full on bearish, right? Because although you can argue now the internal, this would be your position level of structure. If we start to obviously zoom in and go down to the weekly, right? We know that it's easy to argue, right, that we did not take a low, but we took a high. So therefore, because the solidified high is now solidified due to the continuation BOS, that realistically we have a structural range that is bullish from a swing standpoint, which is technically true. But as you guys know, we need bullish internal structure, bullish internal order flow to account for any type of corrective movement / pullback. So, excuse me. So obviously we know that we have to be bullish internally from a swing if we are within a position pullback. So it's kind of the same thing as we go lower through the time frames. So we are technically bullish internally. However, we don't trade based on the weekly, which is based on swing positions. We play based on these structural ranges that are formed here, structural points that are formed here, solidified points that are formed here. But primarily, we are focused on the short to medium term, which is our scalp, minor intraday, major intraday, not necessarily the swing. So now that we begin to zoom in, right, pretty much just recapping everything we talked about for the previous week. We know, right, that our previous direction internally was bearish, right? Obviously, we know that this happened like a couple of months ago. At this point now, we had a continuation BOS. However, after the continuation BOS, right, we have our internal liquidity grab. Internal liquidity grab creates a new formed minor / major intraday structural range, which is towards the bearish side. And then obviously we can clearly see the order flow being present, right? Order flow has now created new structural ranges internally. That being low into high, high into low, I'm sorry, high into low. And then obviously we're seeing the exact same thing now. So let me actually point something else out here before. So as you guys know, our last Zoom, we were realistically aiming for a minimum here, and then obviously we're aiming for previous structure just because the internals or the medium term bias, that being the major intradays, was showing signs of bearishness, right? So although our timing, I don't remember exactly what we said when we were around here last week, but the bias never invalidated, that being up here, bias never invalidated. Then after that, we saw obviously the order flow after we took out the target that we had, anticipated. We created a substantial new low. That order flow is now, given us a brand new structural range. But here's where it gets tricky, because this is now another one of those scenarios, you guys, for the people who've been here for let's say more than a year and a half, you guys know that we don't like to take immediate continuations after liquidity has been taken, as you can see here. I don't know if you guys remember, there was the clearest one that I can remember at the top of my mind was when GU reached its highest point a couple of months ago, I think. It's probably been more than a year now, but that's like one of the scenarios that I'm kind of referring to. And I think we have the same thing here, where I don't think it's wise to try to anticipate, right, some sort of immediate continuation, because we have just taken out previous structure. We just take out previous structure. So now that this has reached an internal POI, not only is this right high momentum, like you see the clear transition here from bearish to bullish, that being high into low, retracement, liquidity grab, and now we are full on bullish, I'm sorry, at least for the medium term. But this is not really showing signs that it wants to slow down. So I wouldn't really count on this really reversing here, especially with how the daily is closing. Looks pretty bullish, could be an engulfing, and it could be a sign of at least a deeper retracement. But the weekly, in my opinion, still shows signs of bearishness. And let's look at the 3-day. We could, hopefully stall and now really look forward to, that overall continuation. From the 3-day, that would be our POI. Let me actually make this a bit. Okay. We'll make that a little bit lighter. So kind of similar to kind of what we saw with EU, and I'll tell you guys what I'm referring to in a bit. But as of right now, obviously the only thing that really catches my eye based on order flow would be up here. Just from the immediate sense, we see our 3-day POI, which is very similar to the weekly POI that we saw in EU, which I'm going to show you guys in a little bit. But as of right now, I don't think we're going to stall here and continue lower. I would more so like to see, a series of failed transitions. For example, if we see a failed bearish transition, right, then obviously we're now bullish inside. So if we then see some sort of transition now within a POI, then we are looking for the continuation. Not to mention, this is a type of premium, right? Some type of premium. So hopefully, we do reach this premium. I'm pretty confident we will, but I guess time will tell. So for right now, I do want to see that continue lower, at least in the longer term. AUDUSD, this one I haven't really been trading much because it has been a bit choppy, but we can definitely remove all these. Do top down on this one as well. Excuse me. So from a pretty much just an overall swing POV, I don't know why it keeps doing that. Why does it keep doing that? First things that point out are potential area of turbulence point. Turbulence point is there. Obviously, we're seeing the position structure high into low into retracement. Retracement has obviously confirmed the reaction from the position standpoint. Therefore, in my opinion, the directional bias as a whole still is to the downside, which is kind of inverse to what we see with the XY. But obviously they're not 100% correlated. So as of just what I'm seeing here, potentially we are still seeing more bearishness, right? And then as we zoom in deeper, that would be our position. Our swing, obviously, we do have high into low into retracement, and the overall structure has already been broken. So this is solidified in every way whatsoever. So as we start to zoom in, we obviously see solidified high to solidified low to here. This is a CBOS, right? CBOS, but it is within the region of a POI. So this, in my opinion, still is bearish, at least from the swing standpoint. So as of right now, the only things that are kind of sticking out would be right there. I know I think there was a bias in terms of looking at, I don't know what time frame it was it the 8-hour? Yes, where we were looking, I think a lot of people were looking for the continuation based on here. In my opinion, I don't think that was correct. But we'll keep going down the time frame. So obviously we are overall bearish, especially with every single structural range showing that as so. So internally, we can obviously see another structural range. I hope you guys can see why I'm choosing this as the internal structural range. This is the last where we see a bunch of ABCs in terms of high, low retracement, low retracement, low retracement, and then we see the CBOS solidifying low. So the reason why I did not agree with this being a continuation POI is, for one, if I am looking at this pullback, obviously we see the CBOS. So that doesn't necessarily mean that we are bullish longer term. It just shows that we have begun the pullback of the overall range. But because this pullback obviously solidified the low here, and then we solidified again. Oh, hold on one second. Because it solidified again, this, in my opinion, can be interpreted as internal unwillingness. Obviously, it's not external unwillingness up until here, but it is internal unwillingness, showing that we are not bullish or bearish, I'm sorry, at least now for the short and medium term. So if we begin to zoom in, actually, you know what? Let me clean this up for you guys. Let me clean this up. Yeah, that's fine. Orange. Right. So because that caused an internal liquidity grab, like I said, this can now be interpreted as internal unwillingness here. So I think that is very, very important. Therefore, in order to assume a change of direction to the bearish side, we would need that bearish transition, which if we zoom in even more, after that, you can see that we really just did not create any type of transition within that area of interest, right? If we're going low into high, retracement. Obviously, internally now, we don't even see any decent pullbacks, but low, 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 nothing was ever broken. So it's really, really hard to justify that continuation to the downside because one, internal unwillingness from the major intraday stance, and then two, there is no internal transition towards the downside. So as of right now, I really was hoping we would hit that POI that we're looking up here. But now this looks like it's trying to free fall, which is kind of looks the same as the XY looks bullish. So I don't think that because we broke through this POI that we will see, for example, this is now another significant break of structure. So because we have seen that and we did not create a substantial new high, it really looks like this might not reach the POI we were looking for. And for all that we know, this could just be a future POI. I don't think it'll happen immediately because like I said, the internal is kind of free falling at the moment. Especially, I don't know, maybe somebody caught this continuation. I'm hoping somebody did. If somebody was able to capitalize on a simple bearish break of structure, mitigation plus BOS, strong order flow, then POI, and you can see that 63, that's about 50 pips. I don't know if anybody caught this continuation. I was looking at that right before the Zoom started, thought it was very interesting. Yeah, about 40 pips. So 40 pips off of potentially a risk of 5 pips. So overall, I think that's very good. But as of right now, like I said, this probably will not continue higher, even though you can argue that this is now a new form structural range. I guess the reaction or the two reactions that are going to matter is what's going to happen here and then what's going to happen at the X. So that's for us to wait and see. But yeah, overall, still kind of bearish on this, unless we, get some sort of strong reaction. But I'm really hoping we even break through maybe POI here. That could be a potential long because you can still argue the bullish break of structure, and then you could have a transition, which would lead to a complete move into the downside. So next, EURUSD. Yeah, if you change EURUSD, cool. This one, like we said last week, it's the same thing with DXY. We were anticipating the continuation to the upside, especially with the structural disruption not structural disruption, I'm sorry, the order flow disruption present that we pointed out last week. So this one is literally the same as EURUSD, as DXY, but inverse. So just like I said before, it's a bit hard to justify the continuation after we cleared a very major point of liquidity. But let me check one thing. We could do top down on this one as well. Right, the one issue with this, we don't have enough data here in comparison to, I think FXCM might have all the data. Let me just check. Yep, it does. I don't remember when we did this, but I think this is a long time ago, actually. I think I remember doing this with Dom. But either way, just based on how the structure is looking right now, the internals are obviously bearish, but the internals are obviously bullish. The externals, I'm sorry, are bearish and the internals are bullish. So this kind of same bias there. Let me go to 2 week. The reason why I'm now a bit concerned for any type of bearish move into the downside is because of that POI that we pointed out. I think it's been like a month ago now. The wick POI that we pointed out about, I'd say like a month, 2 months ago almost. When was this? February? Yeah, about a little bit over a month ago. I'll get to your questions after we finish this, bro. So because we have cleared very major points of liquidity, now that I'm seeing, excuse me, a type of reaction here. Actually, let me do this. Right, we see very clear wick reaction there. As we begin to zoom in, the one thing that I'm noticing here is, excuse me, is the reasoning why we were originally looking at this 2-wick POI that we were, pretty much bullish on since the very beginning, and that is solely because of the structural disruption that we saw here, right? Because this solidifies the high. This is the first time we're breaking any type of low, right? This is the first time we're breaking any type of low, and it failed immediately. So that creates obviously the internal structural range, and that's why this deep premium was a valid reason for us to look for the continuation to the upside. So because this is now taking this out, and if we are to then take out the full POI and go a little bit further, in my opinion, this overall now is a failed attempt of EURUSD to continue its initial trend. And I think this is a failed bullish to bearish transition like that. I think it's a failed bullish to bearish transition. And I think that this could now signify that we are bullish for at least another couple of months. And I think that's very good, because if we can have any type of bias that's kind of not absolute, but it is consistent, at least for a short to medium term amount of time. And at this scale, this is obviously the daily. So this could literally be 4 months. And that way, you know exactly what your bias is, at least from a higher time frame, and you can find internal trades to, play based on that. So just like here, like we said with, I think it was AUDUSD. Was it AUDUSD? I'm pretty sure. Yeah, I think it was. Yeah, how the immediate continuation did not, or is not really probable. Let me put this on here. Right, the internal or the immediate continuation usually is not probable after we've taken out a previous point of liquidity. So in my opinion, I think we could come a bit lower, but obviously the invalidation for your bullish bias would be here, unless, or I'll come back to the unless. Let me just put this back. Right, that is unless we see an attempt, a solidified low, and then that breaks. If that obviously was to happen, then that is now, a failed continuation to the upside, and that would obviously make a move into the downside. But we obviously need that failed transition first, because if we are to break the immediate structure, then we know internally, excuse me, sorry about that. Because the immediate structure has been taken out, we know that the internals are going to be bearish. So if we are going to take any type of long position, you would need any type of transition to justify the scenario. So let's say that you do have that transition and then it's failed, then obviously we would convert the bias. Okay. Next one, gold. This one, like we said last week, this one I don't really have much to say on. It is the exact same thing. I think any excuse to buy is kind of legitimate here, only unless your invalidation is taken. And that invalidation, I'll show you guys right now. Right, is obviously the initial, it would be here. That would convert your overall positions to a bearish side, because there is a turbulence point, a mitigation that created a new high. So not only is that a type of liquidity grab, if that is to break, then we have order flow disruption as well from the previous turbulence point. So as of right now, this is still technically bullish, but it does seem like with the incoming momentum and the transition of DXY to be, pretty bullish pretty fast, we could see this, give us some sort of dip, which is good because you don't really get many of these dips. And even if you can argue that we are mitigating something up here, you could even see that right there. If you're mitigating something, I still think personally that we are bullish, because if this is to break, obviously the internals here, that mean your scalp and minor intraday would technically be bearish, but all that's doing as well is solidifying this low and it's solidifying this high. So any type of move down here is really some sort of attempt at a discount so that we can then go higher. And who's to say we don't start coming back into the POIs that, we recognized a couple of weeks ago. So that's kind of my thoughts on that right now. Last one, Dow Jones. This one I think has been pretty sloppy. It hasn't moved much since. But just because of what we talked about last time, because of what we talked about last time, when were we last time? The 31st. Yeah, I think we were anticipating this to take out the order flow to create the order flow disruption and see the continuation to the upside. So in my opinion, I think this might be going upwards. Just if we're looking at this from a raw state without any drawings, annotations, obviously we are bullish internally. We obviously have our bullish liquidity grab. Our last pretty much major structural range has been broken. Not to mention after that, the momentum has been pretty low, and now we have more bullish breaks of structure. So I think we're, going to go upwards. I don't see why this right now goes to the bearish side unless we reach our invalidation, which technically internally could be there. But either way, if that is to become validated, it would need a ton of momentum to invalidate the bullish bias. Just because if we have high momentum, then that could mean that we still have some sort of internal structural range being shown to us. But in my opinion, I think we are still bullish on here. So that will probably conclude that. Sorry. Let me see. Does anybody have any questions? I have a question. Where? So we broke here, which obviously solidifies the high. And because this is the first time we're seeing, any type of bearish break of structure, that kind of solidifies the range, in my opinion, which is still bullish. But in my opinion, if we still take out levels of structure, you do need some sort of transition, because you do obviously see some sort of, or a ton of inefficiency here. So who's to say we don't come back to tap previous structure or inefficiency and have the transition go upwards. So I don't know if that's what you mean, but if you mean this right here, that solidifies the high. Yes, it's the first time we've broken a significant low. Yeah. So all that means is now that the scalp and potentially minor intraday is bearish. So if you're looking for bullishness, then you would need a type of transition. If you're attempting to be conservative, if not, you could obviously just, if this is how you trade, then you could look into POIs and just go off that. I'm seeing you. Oh dang, that sucks. Let me go to Google Chrome. Yeah, it wasn't wanting to show me that. Yeah, the only thing I don't like, bro, is just how impulsive we're coming down into that POI. That's the only thing I don't like, bro. We are originally bullish. I mean bearish, I'm sorry. This is, yeah, you're right here. That is a failed reaction. Failed reaction. Break of structure there, but we have the counter structure there. I think it's going to be we might see the exact same thing that happened, literally what you're pointing out right here, where we had an unsubstantial new low. So the immediate continuation just did not sustain itself. So just like here, like we saw the unsubstantial new low plus high wick and high momentum. We could see, some type of small reaction, but then it could still continue lower. So I don't know. I think just based on what is being shown right now, I just don't think that the bullishness makes sense. But obviously, all it takes is one or two candles to completely change the game. Yeah, does anybody have any questions? But yeah, cool. Does anybody else have any questions? Haven't been doing a while. I'm trying to... Yeah, that's cool. Yeah, it's all good. And obviously, you guys know that I'm still doing journals. Yeah, we can stay here for a couple more minutes, see if anybody else has any questions. Let's see, 10 people on today. And then awesome. Next 2 weeks, bro. 2 weeks. Cool. But yeah, does anybody have any more questions, or should we end it off here? Awesome. Yeah. You guys let me know if there's any more questions. Keep sending me your journals. I'll respond to them when I can. I don't think I have any right now. I try to be pretty good with keeping up with them, but obviously none of us are perfect. So yeah, with that being said, I'll see you guys in 2 weeks.